Hello and welcome to this Telecoms.com webinar produced in association with eServe Global. I'm Mike Hibbard, Editorial Director at Telecoms.com, and today we're going to be looking at mobile financial services, surely one of the hottest topics in the industry today. Anyone who was at Mobile World Congress in February will certainly have picked up on the buzz around this area. I'm delighted to have with me today Paolo Montessori, who's Vice President for Mobile Money at eServe Global, and I'll shortly be handing over to Paolo for what will no doubt be a stimulating take on this vibrant sector. Just before I do though, I'd like to provide a little background. High-profile news announcements about mobile financial services have become almost a daily occurrence. Major brands from the banking, payment and telecom sectors are in a rush to establish themselves in what is expected to be an increasingly competitive space in mature markets, while over-the-top service providers and nimble startups provide the ever-present threat of disruption. Of course, in some emerging markets, mobile financial services have long since ceased to be a novelty. The genre-defining M-Pesa service operated by Safaricom in Kenya has been running since 2007. Figures for the end of April last year show that the service had more than 14 million users. And in November last year, the International Monetary Fund reported that the service provides mobile banking to more than 70% of adult Kenyans, and that there were more domestic M-Pesa transactions than Western Union was carrying out globally. In markets like Kenya and others including the Philippines and Tanzania, mobile banking services have enjoyed swift uptake because of the relatively limited traditional banking infrastructure. The explosion of activity in mature markets like the US and certain key Asian markets and Western Europe, where consumers have long had ready access to financial service from specialist players, is a far more recent thing. End users are showing themselves to be open to the potential benefits enabled by the collision of mobility and financial services. Digital payment specialist PayPal reported that it processed $4 billion in mobile payments in 2011 and that it expects that number to jump to $7 billion this year. 17 million of its 106 million account holders are regular users of its mobile services. And as this data from Informa Telecoms and Media shows, the number of mobile financial transactions is forecast to grow at an impressive rate worldwide. Informa expects more than 143 billion transactions this year, and more than 740 billion in 2016. While mobile banking accounts for 2/3 of transactions in 2012, other services are projected to show very strong growth, in particular remote payments and person-to-person money transfer. As you can see from this slide, remote payments are expected to generate more than $144 billion this year and almost $740 billion in 2016. Domestic peer-to-peer transactions are expected to amount to $45 billion this year and $365 billion in 2016. It is perhaps not surprising that mobile banking might prove the most popular mobile financial service in the near term, as it's a natural extension of the online banking paradigm with which millions of consumers are now easily familiar. It seems clear enough that the banks should and will retain control over these services. While they have not been universally quick off the mark in giving users mobile-specific applications that allow them to access their current financial information, many banks have now made a range of options available, from text updates to more dynamic smartphone apps. Mobile operators have little reason to be involved in this, other than as the transport mechanism. But the emergence of the mobile wallet, which allows for the provision of a suite of services including remote payment, peer-to-peer payment and voucher and coupon redemption, has created an opportunity for mobile operators to establish a key foothold in this cross-sector ecosystem, trading on their existing financial relationships with their customers, their progress in the emerging mobile advertising sector, and most importantly, their control over the SIM card. GSMA has outlined the operator's viewpoint that the SIM card should be compartmentalized and rented to any player that wants to make use of its secure position at the heart of the mobile device. In the case of US mobile wallet provider ISIS, which is owned by Verizon, AT&T and T-Mobile and due for launch this year, this is exactly the model being used. Banks and payment providers pay ISIS an ongoing charge to enable their cards and accounts to be stored in the ISIS mobile wallet. As you would expect, over-the-top service providers and digital financial players like PayPal are not so keen to see the SIM established at the heart of the mobile wallet. But not all mobile operators agree either, and the central point of dispute is the role of NFC in the SIM-based mobile wallet model. In Sweden, the 4T joint venture owned by Three, Telenor, Tele2 and TeliaSonera believes that SIM-based NFC is some years away and that mobile wallets will need to employ alternative technologies for in-store payment in the interim, although the firm does support SIM-based NFC in the longer term. There are also question marks around the willingness of merchants to deploy NFC-enabled point-of-sale technology. At the moment, NFC deployment in smartphones is restricted, although there is optimism to be found in some forecasts. A recent report from analyst firm Berg Insight shows that global sales of NFC-enabled handsets increased tenfold in 2011 to 30 million units, with 40 different models from a range of vendors on the market. The report predicted that sales of handsets are growing at a compound annual growth rate of 87.8% and forecast that shipments of NFC handsets will hit 700 million units in 2016. But availability of the handset and uptake of a specific service are two very different things. And in research firm Gartner's Hype Cycle for Emerging Technologies, published in 2007, and outlining the firm's predictions for the take-up of new technology, NFC was at the peak of inflated expectations. This translated into Gartner's belief that the technology is 4 to 9 years away from mainstream adoption. While operators may disagree on technologies and models, there seems to be a reasonably widespread view that they're best advised to collaborate in approaching the mobile wallet market. Collaborations and joint ventures are in place in Sweden and the US and Japan and Germany, while the 4 largest operators in the UK have submitted proposals for the creation of their own JV, which are currently being investigated by European regulators. Banding together is important for operators in the mobile wallet space because it allows them to claim reach across a far larger share of the target market than any other player. It also ensures freedom of movement for the consumer. Handset and OS vendors are just as keen as operators to generate stickiness, but if the mobile wallet is to truly replicate the physical wallet, it must be portable between the systems being used to carry it. At this point, though, I would like to bring in Paolo Montessori, Vice President for Mobile Money at eServe Global, to expand on these themes and to share some of eServe's perspectives on the sector, as well as some insights into the firm's activities. After his presentation, Paolo will remain online to answer any questions that you may have for him. To submit a question, just type it into the box beneath the main webinar window on this page at any time, and Paolo will respond when his presentation is finished. His responses will appear as text in the comment stream. For now, though, Paolo, it's over to you.
Thank you very much, Mike, for the introduction. It has certainly been a very interesting journey we've been on over the past number of years in an industry that continues to show great promise and exciting times ahead. I am Paolo Montessori, Vice President Mobile Money at eServe Global, and it is my pleasure to spend the next 30 minutes or so providing you with our vision on the mobile financial services industry sector and where we see things are heading in the years ahead. First, I would like to begin with a brief overview of our company. With over 20 years of experience in mobile payments, starting with secured encrypted vouchers, eServe Global has evolved through the dematerialization of payment means. From electronic payment to a fully featured mobile payment and electronic wallet solution, PayMobile offers m-commerce, peer-to-peer transfer, international money and airtime transfer, and much more. In addition, with GSMA accreditation, our global hubbing service, HomeSend, which is provided via our strategic partnership with BIX, provides the first truly mobile-centric approach to international remittance. Our 230-strong team is present in 14 offices, serving 82 customers in over 55 countries. And it is my pleasure speaking to you today from our headquarters in Paris. Regarding our pedigree in the market, we commenced our activity in this space back in 1998 with voucher-based recharge that then evolved over time to the launch of electronic-based top-up of airtime accounts. The benefits of e-recharge were definite and immediate, with a clear increase in customer activity and accordingly revenue, as well as in some cases phenomenal cost savings on distribution of vouchers. One customer of ours reported, for example, a 73% savings in airtime distribution within 6 months of migrating from voucher-based recharge to e-top-up. With this type of momentum, we clearly saw the opportunity to use the transaction engine technology developed for e-recharge, as well as the agent network and commissions management, to apply to mobile money. In 2009, we joined forces with BIX in a strategic partnership to launch the world's first mobile-centric international money remittance service, endorsed by the GSMA. The partnership took our technology layer and coupled it with BIC's experience and processes in international settlement, foreign exchange management, and clearing to provide an end-to-end remittance hub. The success continues to build on this initiative, with the HomeSend hub now covering over 325 million subscribers and multiple multinational groups signing on as well. With our pioneering mobile money products and services, we help telecommunication service providers capitalize on the trusted relationships with their customers and retail agents to deploy groundbreaking mobile money services, ranging from simple payments to international money transfer. We offer full end-to-end and any account to any account mobile financial services and international money transfers. The fundamental purpose of our offering is to encourage the growth of mobile financial transactions by providing tools to our customers that will enable the charging of money into the system and the ability to spend that money in a user-friendly, valuable, and meaningful way for the individual. In an emerging market with a largely unbanked or underbanked population, this can be the first access to financial services for a majority of individuals with all of the benefits of increased security, convenience, and ability to benefit from services previously unavailable to this sector. In a more developed banked market, the benefits are focused around convenience and the collation of various technologies and information tools, including access bearers, geographic location, consumer preferences, and customer-specific targeted promotions that make the spending process richer and more individual. The eServe Global Pay Mobile platform essentially serves as a bridge between the mobile ecosystem and the bank payment ecosystem. This can operate in either a closed-loop fashion, as is commonly seen in many mobile money deployments today, with the generation of a mobile wallet that is mapped to a customer's telephone number, enabling the customer to carry out domestic person-to-person money transfer, utility bill payments, merchant payments, just to name a few. In addition, however, we can also bring the customer on a journey to the open-loop ecosystem by issuing a prepaid card that is mapped to the mobile wallet, thus enabling him to join what we coin as the legacy payment networks. The benefits are clearly the ubiquitous acceptance of the card payment mechanism that can accelerate the widespread adoption of the program, as well as introduce new revenue-generating streams for the mobile operator as they venture into the payment acquisition space. So today we will commence with a brief overview on the point at which we have reached to date and some ideas on where we are headed. Following this, we will look at the emergence of practical uses of what we have developed and how it translates into industry vertical specific services with some interesting use cases from around the world. We will then move on to the discussion around collaboration. As the mobile financial services industry grows, so do the number of participants in the ecosystem, all with their own objectives and limitations. This leads us on to the point regarding domestic interoperability. We have, via our experience with the HomeSend International Remittance Hub, had the unique opportunity to work on the challenge of using hub technology in order to switch financial transactions between multiple operators. We will look at how we can use that experience and apply it to domestic interoperability. And finally, we will close the session on the ever-popular NFC debate. Where is this technology taking us, and how does it apply to the mobile operator in the value chain? We have certainly gained a fair bit of traction in what can be regarded as one of the fastest moving industries in the world today. What was viewed with some skepticism only a few years ago has resulted in the creation of an entire industry comprising over 120 deployments of mobile money offerings globally. We have seen numerous traditional telecom vendors and financial services vendors venturing into this space to see how they can provide the technology to bridge the gap between the two industries, and the rise of venture capital-backed startup companies, some successful, some not, serving this growing industry. We've seen mergers and acquisitions, the entry of the payment industry giants from the legacy payments business, the likes of Google and PayPal, to only name a couple entering the space, debates regarding customer ownership, the establishment of bank and industry regulations, etc. It has been a hotbed of activity and promises to continue to be so for many years to come. Now, I could have spent the entire webinar quoting industry statistics around mobile money, mobile banking, near-field communications. It has been an ongoing industry joke that the only ones making money out of mobile financial services are the analysts. But all jokes aside, it is important not to take these statements lightly. The reality is that this is a promising industry, and these types of statistics serve a great purpose in encouraging investment and providing momentum to a growing industry. This results in innovation and progress, which in turn fuel growth for the business. So in a certain sense, it's a self-fulfilling prophecy. Without going into too much detail, here's a snapshot of services that exist in the mobile money market today. We have what I would coin as core offerings, consisting of cash in, cash out, domestic person-to-person money and airtime transfer, over-the-counter agent money transfer, airtime top-up from your wallet, salary disbursement. Essentially, all of the services that can be launched by a mobile operator utilizing some technology, an existing agent network that is already selling prepaid airtime recharge, and perhaps VAS services, and a bank partner as required by the local regulatory authority. More interesting, however, are services like bill payments, card payment, and microfinance, because these are areas beyond the traditional domain of a mobile operator, and they require some level of partnership. So now let's look at a couple of examples where we can take these lessons learned and the technology developed and apply it to some specific market requirements. Government-to-person payments using mobile technology fill numerous demands and satisfy as well a number of market requirements for various entities in the mobile money ecosystem. G2P payments is a way to put money in the mobile money ecosystem, automatic and recurring cash in. Targeting governments ensures rapid growth of the mobile money user base to, in a sense, force the use of services by end users. This, in turn, assists in building end-user trust in new services, especially when it comes to financial services, and this is a key element. Governments are major employers, and the facilitation of salary disbursements and pension payments injects substantial float into the ecosystem. The disbursement of social assistance for the poor and welfare payments as well not only reduces the cost, but also increases security for the beneficiaries and reduces the opportunity for corruption. So, following on that governments for their G2P payments can be a sufficiently large first client of mobile financial services to justify the initial investment in the technology that new companies entering this space need to make, let's look at a couple of use cases in that market. In the Philippines, for example, 24 million Filipinos live with less than $1 per day. Globe GCash is used both by the government, the Department of Social Welfare, and the UN World Food Program for help disbursement. The World Food Program distributes SIM cards that are to be registered as GCash. The World Food Program then credits the SIM-associated accounts, and the end users can use those accounts to cash out. Another case is in Brazil, where 1 in 4 Brazilians, approximately 50 million people, receive welfare of some sort. Bradesco, which is the largest private bank in Brazil, offers branchless banking via post offices and small retail shops, serving around 5 million customers, 27% of which were previously unbanked in any fashion. The Bolsa Familia, which is the family grant in Brazil, is a conditional cash transfer program that gives regular payments to the poor families in the form of cash or electronic transfers into their bank accounts if they meet certain requirements. Those requirements can be keeping their children in school or attending regular medical checkups, etc. Now, this is no small amount of money. $13 a month for each child 15 or younger, up to 3 children. $90 a month for each child 16 or 17, still at school, up to 2 children. Extremely poor families receive approximately $40 a month without any condition whatsoever. A perfect fit for a mobile money deployment in order to facilitate the disbursement of that cash, increasing the security, and alleviating the requirement for people to attend and stand in large queues in order to access their cash. In India, FINO, which is the Financial Inclusion Network in Operations, offers a suite of POS-powered financial services available to over 40 million clients via door-to-door agents. The investors in FINO involve public and private banks, telecom companies, international agencies, and private trust to serve the unbanked and underserved population of India for pension and government scheme benefits, savings accounts, loans, remittance, and insurance. One of the first services offered by FINO were G2P payments and state health insurance. In February 2011, 28 million customers served. They were initially recruited by insurance scheme, 10 million, government payments, 10 million, and financial services, 8 million. So this is just to underline a few cases in different geographies in the world where mobile money technology can certainly facilitate the growth of this sector. Another interesting vertical is the large corporate sector, with clear benefits in the FMCG business. Salary disbursement of employees is a simple first step in order to build a relationship between the operator and the corporate. Following from this, we can look at the benefits in the area of fast-moving consumer goods distribution and cash management, as the use of mobile money in this sector represents a reduction in the cost of central processing of orders and cash collection, increased security for the merchants and the delivery personnel, and processes that save time, resulting in the ability for the merchant to spend more time selling at his shop. As the mobile money space matures and the number of participants in the ecosystem continues to increase, it becomes clear, as mentioned earlier in my presentation, that collaboration is of key importance in order to foster growth and the success of useful services for the end user. So, let's return now to the slide we covered earlier and zoom in on three services in particular: bill payment, card payment, and microfinance. All three of these services I would qualify as outside of the traditional comfort zone of the mobile operator, and in a similar fashion, traditional participants in those three areas have been distanced from the complexities of the mobile technology space. What is encouraging to see now, however, is that thanks to the process of technology development and readiness to serve these areas, we've been able to bridge between these traditionally siloed areas, and we are seeing collaboration and cooperation between industries as they begin to understand each other. If we look at the microfinance area in particular, for example, the benefits of mobile technology for savings, loan repayments, etc. are quite clear. But what about using the customer behavior and all facets of information available to the mobile operator regarding the customer's spending habits and applying those to a credit scoring facility to pre-qualify individuals for financial services previously not available to this sector? The issuance of prepaid cards associated to a mobile wallet is another area of non-traditional business for a mobile operator that is evolving quite quickly. We at Eserve Global are facilitating the required partnerships in the ecosystem in order to utilize this as another method for the mobile operator to acquire transactions. The more cash you can get into the system and more transactions you can acquire as a mobile financial services provider, the better. Bearing in mind always that the mobile wallet needs to be the central point of all activity in order to maintain the customer relationship. Another flavor of collaboration in the mobile money space is collaboration of mobile financial services programs at a domestic and international remittance level. We have seen a number of closed-loop systems deployed in many countries around the world. Can we take the lessons learned from the explosive growth of SMS as a result of interoperability and apply it to the mobile financial services domain? Both domestic and international interoperability are crucial for mass adoption and growth in this market. The dramatic increase of activity in mobile services as a result of interoperability of systems is a proven case, and it is time that we take those learnings to the mobile money arena. If we look at this diagram, we can see that as we have multiple independent mobile money offerings in the market, the growth of transactions is directly related to market penetration and the number of wallets enabled on the independent networks. With a simple animation, however, we can demonstrate how the interconnection and launch of interoperability of domestic mobile money services can exponentially increase the number of interconnections and therefore opportunities for transactions across all participating networks. The technology required to provide this service exists, as well as the processes and know-how to provide financial settlement and reporting services between the participating networks, which is why I believe that we have now matured as an industry to the point that domestic interoperability will be a reality in the short term. This slide demonstrates that interconnection and collaboration between mobile money service providers has very real use cases, including the use of a subscriber of Network A having the ability to cash out on a Network B agent, as well as the simplification of integration of merchant networks and m-commerce actors in the mobile money ecosystem. A few words on HomeSend, the international remittance hub provided by Eserve Global in strategic partnership with BICS. Here we have a service that has been created with great focus on the needs of the market and the reality of life in both sending and receiving countries. The use case is simple, as demonstrated here. One user sends money internationally to another and is sent and received instantaneously in the sender and receiver's respective local currencies. Important to note here is that whilst the international remittance is instantaneous for both the sender and receiver and available 24/7, we have also taken care of the settlement process, whereby the batch processing of the financial settlement between the remittance service providers is managed as well. It is thanks to this hub-based technology and the simplicity of a one-time integration giving access to multiple international remittance corridors globally that has proven to be successful, with a network of 358 million mobile subscribers now having access to the service globally, and the momentum is not only continuing, but increasing substantially. The final point on the agenda today is near-field communications and the potential we see in this area of technology. There is no secret regarding the potential effect near-field communications will have in general on the payments ecosystem. The statistics are clear that the mobile operators are working with the GSMA to move forward on SIM-based NFC solutions and services. The point-of-sale device vendors as well are working feverishly to ensure that the devices are not only NFC capable for acquiring transactions, but also ready to deal with the multitude of applications that will be NFC enabled and required to be routed to either the legacy payment network or loyalty program or coupon redemption system, etc. Now, there's been a fair bit of press around the lack of NFC-enabled handsets, which has been blamed for the slow adoption of NFC technology in the mobile space as well. Many consumers were disappointed when Apple delayed the NFC enablement of the iPhone, as many hoped to see it in the iPhone 5. Now, we know that the technology is not a barrier. NFC capability is ready, whether it be chip-based or SIM-based. So, where does the problem lie? While predictions about an NFC boom have swirled around the industry for years, there are still very few examples of its effective deployment. The primary reason for this being that there is still a debate about where the secure element of the NFC chip should be located. The two schools of thought are that it should either be located within the SIM, as supported by the mobile operators, or be chip-based, as supported in general by the handset device manufacturers. We've seen the recent activity in the UK that resulted in the stagnation of what could have been regarded as the first true example of partnership by three mobile operators to jointly launch and promote mobile payment. It is disappointing to witness the disruption of a positive industry initiative, and hopefully we can take the example of collaboration between different ecosystem partners and the collaboration of mobile financial services providers at both a national and international level to foster industry growth, rather than the alternative, which will stagnate growth. With this, I would like to thank you for attending the webinar, and I hope you found it a valuable use of your time. I will be online for a short while to answer questions in the on-screen Q&A blog, so please submit any questions you may have, and I will do my best to respond. Thanks very much.
Thanks very much, Paolo, for sharing those insights with us. Now, as I said, Paolo is available to answer your questions. If you have a question for him, just type it into the comments box on this page, and Paolo's response will appear as text in the comment stream. There is no audio element to the Q&A. I look forward to some interesting debate now. But before that, I'd just like to thank eServe Global for making today's Telecoms.com webinar possible, and to thank everyone who joined us for the presentation. I hope you all have a very good day.